Hey everyone, welcome back. Today we've got a massive explainer lined up on a highly anticipated event in the technical textile space. We are diving deep into the upcoming 650 crore rupee initial public offering from Kusumgar Ltd. If you're trying to figure out whether this high-tech fabric manufacturer deserves a spot in your portfolio, you are in exactly the right place. We're going to strip away all the jargon, look straight at the hard numbers, and give you a comprehensive breakdown so you can make a truly informed investment decision. Okay, let's dive into this. Here's our investor blueprint for today. We'll start with the Kusumgar business model, then move to important IPO offer details, the 3-year financial scorecard, strengths and future growth, key risks and concerns, and finally, we'll wrap up with our final investment view.
Starting off with Section 1, the Kusumgar business model, engineered for performance.
So when you hear the word fabrics, your mind probably jumps right to, everyday clothes. But that is absolutely not what Kusumgar does. They specialize in engineered synthetic fabrics. We're talking about high-performance, highly specialized textiles that literally require advanced engineering to create. These materials have to hit some seriously demanding parameters, things like extreme tensile strength, severe abrasion resistance, and absolute waterproofing. Kusumgar brings over 4 decades of deep experience to this niche, boasting an impressive lineup of over 1,000 unique, highly engineered products.
And the stakes involved in the industries they serve, they are massive. They supply critical materials to defense, aerospace, automotive, industrial manufacturing, and even the medical sector. They aren't making fast fashion. They're creating high-strength woven fabrics and specialty aerospace-grade materials. These are literal, mission-critical components for both domestic and global clients. When you supply the military and aerospace sectors, the barrier to entry for any competitor is just huge because the quality requirements are absolute.
Let's move to Section 2 and see how this builds. Important IPO offer details, covering dates, pricing, and structure.
Grab your calendars, because here is your critical timeline. The subscription window officially opens on July 8, 2026. You only have a couple of days to act, as it closes on July 10th. The basis of allotment is expected by July 13th. With refunds and DMAT credits rolling out the very next day on July 14th. Finally, the stock is expected to make its big debut, listing on both the BSE and NSE on Wednesday, July 15th.
So what does it actually cost to get in? For retail investors, the price band is set between 398 and 419 rupees per share. The lot size is 35 shares. That means your minimum required investment, if you applied the upper end of the price band, is exactly 14,665 rupees. Overall, the company is looking to raise a total of 650 crore rupees through this issue.
But hold on a second, we really need to pay close attention here. So, the crucial point is 100%. This represents the exact structure of this public offering, and it's something every single investor must understand before jumping in.
This IPO is a 100% offer for sale, or OFS. Let's break down exactly what that means for you. On the fresh issue side of the equation, absolute zero. The company itself, Kusumgar's corporate balance sheet, will receive 0 new money for factory expansion, 0 for debt repayment, and 0 for new projects. Instead, the entire 650 crore rupee pie is an offer for sale. That means 100% of those proceeds go directly into the pockets of the existing promoters and selling shareholders who are cashing out. You are essentially just buying their shares. You're not funding the company's future growth directly. Moving on to Section 3, the 3-year financial scorecard. Let's look at profitability and revenue trends.
When we look at their financial trajectory, we see a really solid baseline. In FY 2024, they posted revenues of just over 692 crore rupees, with a very solid profit after tax of roughly 98 crore. They saw excellent growth stepping into FY 2025, bumping revenue up to 779 crore rupees and profit to nearly 112 crore. However, the latest financial year, FY 2026, tells a slightly different story. We've seen a recent softening, with both revenue and profit declining just a bit compared to that strong FY 25 peak. It's a noticeable dip that you definitely need to factor into your growth expectations.
Yet, despite that recent dip in top-line revenue, Kusumgar holds a very powerful ace up its sleeve. They maintain incredibly healthy EBITDA margins, right around 27%. Because their products are so highly engineered and difficult to replicate like aerospace-grade textiles, they command real premium pricing. This 27% margin showcases exceptional profitability and operational efficiency, easily outpacing many of their conventional listed textile peers.
Section 4, Strengths and Future Growth. What drives Kusumgar forward?
The core strengths of Kusumgar are deeply rooted in their specialization. As a leading manufacturer with over 4 decades of history, their technical expertise creates a massive competitive moat. It's incredibly hard for a new player to just wake up and decide to make advanced defense fabrics. They have a diversified industrial customer base, strong, high operating margins, and they are increasingly tapping into some very lucrative export opportunities.
And looking to the horizon, global macro trends align beautifully with Kusumgar's product pipeline. The massive push for defense modernization provides a huge runway. You've got expanding aerospace manufacturing, a rising need for advanced fire-resistant protective clothing, and a major shift towards sustainable technical textiles. Kusumgar is perfectly positioned to capture this demand, particularly in the high-value, export-oriented specialty fabric market.
Now for Section 5, Key Risks and Concerns. Let's look at the bear case.
We always have to look at the risks, and these are the primary concerns outlined in the prospectus. We've discussed the OFS structure. Again, zero fresh funds are flowing into the company to fuel new growth. There's also significant customer concentration risk. A large chunk of their revenue relies on just a few huge buyers in the defense and aerospace sectors. If one of those contracts falls through, it hits the bottom line hard. Plus, their export ambitions expose them to global trade policy risks. They're asking for a premium valuation compared to some peers, and we simply cannot ignore the revenue moderation we saw in FY 2026.
Additionally, and you'll see this with almost any company of this size, the red herring prospectus notes certain legal and regulatory proceedings involving the company and related parties. Now, while there are no publicly reported litigations that currently threaten their day-to-day ability to operate, diligent investors should always review the risk factors section of the RHP to understand these pending matters for themselves before risking capital.
Finally, Section 6, Final Investment View. Here is our explainer assessment.
And this brilliantly illustrates the overall profile of Kusumgar. We rate their business quality a very strong 4.5 out of 5. Their technical moat and high-tech product line are fantastic. Financial strength and long-term growth both sit at a solid 4 out of 5, heavily supported by those 27% EBITDA margins and incredibly strong sector tailwinds. But the risk level is medium to high. That 100% OFS structure, combined with reliance on key customers and a recent softening in top-line revenue, means this is for sure not a risk-free ride.
If you found this explainer helpful in breaking down the Kusumgar IPO, do us a quick favor, hit that like button and subscribe to Share Bazaar Baat. Press the bell icon right now so you never miss our deep dive analysis on the latest IPOs, SIPs, and stock market news, all designed to make you a much smarter investor.
So I'll leave you with this final provocative thought as you prepare for the subscription window. With absolutely zero fresh capital entering the company's balance sheet and a noticeable softening in their most recent annual revenue, will Kusumgar's incredibly impressive high-tech margins actually be enough to justify the premium price tag they're asking for? It's a really fascinating balancing act between a brilliant specialized business model and a demanding valuation. Weigh the facts, read the RHB, and invest smart. Thanks so much for joining me on this explainer, and I'll catch you in the next one.